I'm Matthew Dell, Financial Advisor at Acorn, and welcome to Hot Topics. In today's edition, we will be discussing how geopolitical tensions and war in the Middle East are impacting your portfolios and how to manage the volatility. Now, the reality of the situation for investors is markets are always dealing with something. In this case, the past month, you have seen significant short-term volatility with markets down across the board, as well as a heightened level of uncertainty both here in Australia and overseas. This can cause investors to react in the heart of the panic, selling out of their investments with the aim for that greater level of certainty and trying to stop the short-term pain. Unfortunately, at the same time, this can result in the same investors missing out on the bounce-back recovery, as it's impossible to predict when to get back into the market. Our role as your advisors are always going to be to manage your investments and do it in a disciplined and measured way whilst we continue to assess things moving forward as they develop. Now, you would have heard your advisor harp on about diversification, and there's a key reason for this. History tells us that geopolitical events, even major ones, rarely derail well-diversified long-term portfolios, with diversification not only helping you get through the short-term pain, but maximizing long-term growth. Diversification can mean the balance between growth assets like shares and property, which are designed to generate higher long-term returns but are volatile, and defensive assets like cash and fixed interest, which are designed for more to preserve your capital and to pay income. The appropriate mix between these two is typically set out in your identified risk profile and will align to your investment objectives. But diversification is more than just a combination between growth and defensive assets. It means spreading investments across different asset classes, sectors, and regions. This is key because different assets respond differently at the same time, so that they essentially take turns along the investment journey. You may look at your portfolio and you see one sector is underperforming and one sector is doing really fairly well. This helps out to smooth returns and is exactly what we love. The diversified mix of assets creates a sink and a growth and strength, importantly, within your portfolio that history shows us to be one of the most reliable ways to grow your portfolio over the long term. Lastly, I would like to mention that your advisor at Acorn Wealth has been helping clients through many periods like this before, and we look forward to continuing to provide our service through the highs and the lows. Please feel free to contact your advisor if you would like to discuss further. Thank you for listening and have a great day.